Good afternoon, everyone. Just do a quick audio video slide check here. Make sure you can see what we're seeing anyway. Just type a Y in the question box, I think it is, for in GoTo. Just let us know that you can see and hear okay. Yes, yes. All right. All right, perfect. So again, good afternoon and welcome to today's exclusive live webinar, The Market Maker's Secret They Don't Want You to Know. I'm John Madison with FFR Trading here, and I'll be your host today for this exciting event. This is the first of a two-part series with professional trader and author Joe Duffy. Before I begin, I just want to thank everyone for joining us. You're going to learn the same principles and strategies Joe has used over the past 30 years to achieve consistent profits and success. And yes, he'll even reveal 2 free trade setups today, so you can review that, study that immediately after today's presentation. I'm on the wrong slide there. All right, everything that we're covering today. Again, this is part 1 of a 2-part series. Part 2 will be on Thursday here, but Joe's going to review his proprietary scoop indicator. We'll get into Target Zone, his program. It's up, I think, remember, Target Zone's up close to 100% this year already. Quantum AI, that's computer-generated signals. Joe's going to get into that. The mathematical formulas that the market makers use to identify explosive moves, how to remove the human emotion entirely from your trading. And again, everybody that attends both events here will get Joe's ebook, The #1 Secret to Growing Small Trading Account. And don't forget, Joe's got 2 stock picks coming up here as well. All right, risk disclosure, take a moment to review this. This is the required risk disclosure. Trading futures, options, and currency involves substantial risk and may not be suitable for all investors. There is always potential for loss, and past performance does not guarantee future results. Our presentation today is for educational purposes only, not financial advice. You should always consult with your own advisor before making any trading decisions. If you don't know who we are here at FFR Trading, at FFR, we've been helping traders for nearly 2 decades, providing access to verified professional systems and expert strategists to help individual investors succeed. So since 2018, we've partnered exclusively with Joe Duffy to bring his Target Zone options and quantum AI programs to our clients. With an A+ BB Better Business Bureau rating and a 4.7-star Google review average, we're proud to be one of the most trusted trading support agencies in the US. Our mission is simple: to help you trade with structure, discipline, and confidence, just like the pros. All right, let's introduce our featured speaker here, Mr. Joe Duffy. So Joe's got more than 30 years of trading experience. He was a top 10 finisher in the US Trading Championships with verified real-time, real money results as high as 432%, and a professional background as both a CTA and exempt hedge fund manager. He's been ranked as the #1 institutional analyst by the Greenwich Survey, very prestigious award there, and spent years as a prop trader for a major international bank. Today, he's going to share the insiders' insights market makers don't want retail traders to know, and how to use his Target Zone and quantum AI systems to spot high probability trade setups with precision. So please join me in welcoming Joe Duffy. Joe, how are you doing today?
Good, John. Can you hear me okay?
Perfectly. So
okay,
where are you hailing from today? Are you in Palm Springs? Or are you in Canada? Where are you at?
No, still in Canada. Yeah, stay here until Christmas.
All right, perfect. So I know you got some great stuff for it, so I'm going to get ready to switch over to you.
Okay.
And
do I have to for the screen share?
Yep.
Okay, show screen. Good. Okay. All right. Okay. Oh, sorry, I shrunk the wrong one there, John. Just one sec. Sorry, bud. Okay. Can you?
I see your chart there.
Okay, yeah, okay, good. I just wanted to get rid of that. Yeah, okay. All right, so what we're going to talk about today is two things. One is the X-ray indicator, which is the probably more straightforward of the two things that I'm going to show you. They're both proprietary, so no one else is looking at the same things I am, which is very important. And I want to add to that, what I'm going to show you today is this part of the package. One of the things that's happened, just to give you a little history on the market and the background, is the option market has become so increasingly important that it's now actually not a derivative where it's a derivative of price. We're now at a point where the tail is wagging the dog, and positioning in options can actually push the market one way or the other, or keep it from moving one way or the other. And so that's a large part of what I do too, looking to see how, looking at the raw data and looking at the trades, and there is some, I guess, experience or subjectivity in trying to see who does what. But I do look at option positioning a lot, and especially if there's large, say, orders of short puts. That's the number one reliable way for big money to be long, is to be short the puts, because you get the time value working for you. So I like to look at that and see, you know, which stocks have a lot of activity in the short put side. That's just one of the things I look at. I also look at the dark pool, which is, you know, big block trading. So that is in addition to what I'm going to show you today, which is towards traditional technical analysis, although as I said, it's proprietary to me, so not everybody's looking at the same thing. Okay, so this is what I call my X-ray indicator, and it's not that hard to use. The first thing you want to do is look for changes, and if you can see where my crosshair is, I hope you can, it's on about the left quarter of the screen. What you want to do is look for changes where the market changes from red to blue, okay? And if that happens, you then get to go look straight down that vertical line and see if the band at the bottom, which is the permissioning band or the X-ray band, is also blue or has just changed from red to blue. And in this case, if you look where that crosshair is and you follow the vertical cursor down, you'll see that both the price bar and the X-ray permissioning bar have turned blue. So you're permissioned to go long there. Now, what I also like to see, and it's an important part of this, is I want to be trading in an environment where the market's been making higher highs and higher lows. So I'm not taking every time the market flits, changes color. I want to see that I'm trading within a pattern of higher highs and higher lows. So through here and through here, I'm only looking to take the blue bar. So like this red bar here, for instance, it doesn't interest me as a sell, because why? Well, I'm just coming off a new high. Why would I be interested in selling? What I'm interested in is seeing if it flicks to blue, which it did. And on this particular case, I would look below and I would see, oh, no, X-ray is still red, so it's not a signal. So I didn't have anything there. I had one here. Do I have one here? I do not, because it's still red below, so I don't have a signal there either to buy. I don't have a signal here because it's still red below. Right here turns blue, but I look below and it's also blue, so I have permission to go long there. Okay, so I've got a buy signal back here. I've got a buy signal right here, both of which, for my purposes, were good. So this is an entry at about 597 and change in the S&P. 4 days later, the market's 609. If you're trading options, a 12-point move in the SPY, as you know, is plenty for you. Now, would I have taken the sell here? Well, no, even though I wouldn't have, because it turned red and I look below and I see X-ray also turned red, which is a cautionary note, but it's not a sell-short note for me. And why wouldn't it be? Well, because I've got a pattern of higher lows and higher highs. I'm not going to short coming off a new high. Okay, I'm looking for a secondary top at least before short. They can say, oh yeah, but that was a great sell signal. That doesn't matter. I'm not looking for every sell signal. I'm not trying to catch every move. I'm trying to catch ones that have a high probability of being correct. So coming back here, we turn blue again and we look down below and we see X-ray is also blue. So we're permission to go along there. And of course, you know, off we go there. Coming up to recently here, again, you wouldn't be taking this sell signal or this red bar because we're coming up new highs. We're not making lower highs and lower lows. We're still in an uptrend. So we turn blue the next bar. Is that a buy signal? No, because you look below and the X-ray is still red, so there's no buy signal. Okay? So there was actually no buy signal coming out of here from X-ray. So that's how that works. It works on all stocks, and it's more for swing trading. You know, you don't want to get into hourly charts or anything with this because it can get a little noisy. But for daily charts, it's great, and so it's a nice tool for me to use. Now the other one that I have is a scoop pulse indicator, which is a little bit more sophisticated. So I'm going to show you the steps involved here, and so first of all, first step here is defining the trend. So again, I've got the SPY up here, but just because, you know, it's the major index and it's right up to trading today. So there's no cherry picking the time frame. In fact, I'll make the time frame even bigger here. So you can see in a very broad sense here, if you were only trading long, even you just stayed long while it was blue, and then you got long again when it turned black blue again, and so forth, you'd be doing just fine all alone like that. But it does give me a pretty good sense of whether I want to, in the bigger picture, be long or short. So once we get here, if you follow my cursor about a third off the left of the chart, you can see that everything starts to be on top of price, and price comes up here and it can't get through, and it declines further. Now remember that it's much easier to be a bull, right? You have to be less precise and you know, just less accurate to be a bull, because the market trend is usually going to bail you out. To be a bear, you can make money quickly because declines often happen quick, but you need to be more precise, and you need to understand that you're trying to hit a small window because most of the windows are going to be going up. So you have to understand that. So we're back blue again, blah, blah, blah. So basically, as you can see, this is just a way, so you can see right here, again, about a quarter in from the right-hand side of the chart now, that we got below everything here. And, you know, I didn't want to be long through all this decline right here, only wanted to be short. So that defines my trend. Basically, am I mostly blue or am I mostly red? And if there are periods where it's kind of choppy in between, like here, well, what happens in the choppy in between periods? If you follow the horizontal cursor, you'll see that right around 548 there, the market just fluctuated back and forth, didn't really go anywhere. So there was not much to be gained anyway. So the fact that it was chopping back and forth, trading these red and blue, some red, some blue, is just an indication that this isn't a great market for me to be involved in the SPY. So that's part one, is define the trend. Okay? Now, one of the axioms that I have is that trends don't give up without a fight. Okay? And pretty obvious, they don't. You can see every time the market pulls back, it tries to fight its way back. Sometimes it makes new highs and sometimes it doesn't. When it's going to change trend, what it will do is it'll still try to come back. So like you can see now, if you follow my crosshairs again, you can see that this decline here started to get below the blue. It came up, it couldn't get through the highs, and it rolls over again, and now it's below all the red. So there was the fight right here. Okay? It didn't want to give up this trend. Okay, so that's why I say I want to see a lower high at the very minimum before I consider the short side. In most cases, unless there's something to do with a particular option or something I see in the dark pool that makes me want to pull the trigger the other way, most times I'm just using the logic of which way is the trend. Now, you just don't want to buy anywhere when you're doing this, and this is where the scoop comes in. Now, the scoop indicator is this. Again, I'm going to be about a quarter of the way from the left-hand margin of the chart. And as you can see my crosshairs, if the scoop histogram, which is the solid line, okay, they're red or they're green. The histogram is either red or it's green. Okay? When it's green, I want to be looking mostly to the buy side. And when it's red, I'll be looking to the short side. Now, the yellow line is the scoop oscillator. And what I want to look for is a scoop oscillator that comes down and starts to turn up while the histogram remains green. And the more solidly above zero it is, the more above zero it is, the better that signal will be. Okay, so this is a marginal signal right here because, oh, it just came down almost to touch and then it turned up. It's still a good signal because it was green and it turned up. And that's if you now follow the price. If you follow that vertical cursor, you'll see what price did when the oscillator turned up and it was green. Now here we have an opportunity where you can see how green it is. It barely went down. And the oscillator, the yellow oscillator, did go down below zero and turned up. And you can see, you had very little risk from that low right there, and off you went. Again, you've got a little bit bigger decline here, but still it stayed green. And when it turned up, the market started going up. Here, a more solid green. You can see the market got below zero here. The oscillator turned up, but look how green the histogram was. That tells you the market's pretty strong and you want to be buying any kind of little dip here. And that's what this signal does to do right here. Now, does it work in the short side? Yes, absolutely it does. Just remember, as I said, the short windows are fewer and you have to be more precise and you have to kind of use all your tools to make sure that you're getting on the right side. Now, recall I also said that if the market's going to turn over, it's going to at least try to rally back at some point. Okay? So in this point here, you can see the histogram is really, really pretty solidly red, indicating that this selling here was pretty strong. Then the market comes up, and the oscillator, the yellow oscillator, comes up, and now it starts to roll over. Okay, so I'm just going to leave that cursor there so everybody can see that vertical line, how it lines up with precisely with a rollover in price, and how solidly below zero that histogram is. Now, that much below zero indicates the trend is pretty strong, and you want to be looking for any opportunities to get short. Okay. Now, eventually, the market comes back down. Here's a little sell signal right here. Okay, the market. This was not a good sell signal, and this is why I say two things about that. One is nothing's perfect. This is almost, but it's not quite perfect. And you have to be pretty precise with your sells. Now, this isn't a sell I would have taken after the market's already been getting murdered, but you can see right here that scoop actually did turn down a little bit with a red oscillator. And then once it turns back through, you've got all these opportunities here. If you follow that crosshair, you'll just see all these opportunities where the histogram is really, really solidly green. The scoop oscillator, the yellow line goes down and turns up. Those are your buy signals. Okay? So you can see we've had them, blah, 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 blah. Now, one of the things I'm looking at right now, as I said, this market is right up to the present day. So the bar that you see is the one forming today, that very last bar. And I've been saying for a while, after this decline here, when, to be perfectly honest, I've never seen everybody get so bearish so quickly as after this bar. And I was telling you guys, if you follow my videos or you're a member of Target Zone already, you'll know that a couple of days before this decline, I was saying I see some things in the options that I don't like and belong here. And then we got this decline. And then the big money who had shorted up here, I could see that they were taking that position off, and I flipped back to bullish. at the same time that almost everyone flipped to bearish, and it was confirmed by scoop. Really solid green starts to turn up, and we've been long through here. We've been long Apple, we've been long Bank of America, we've been long Starbucks, and Starbucks we already took profit on, but the other two we still have. So we're able to take advantage of that. So let's put it all together, the two things I've showed you, the scoop indicator and the trend, and here's what it looks like. So I'm only going to take these buy signals in scoop when I'm solidly above the blue trends. So the green lines or the green arrows indicate where? Two things. I've got an uptrend, it's indicated by my blue, all blue. Okay, if it's all blue, the trend's up. And down below, I've got a buy signal indicated by the fact that the scoop histogram, the green one, is solid or above zero, and the scoop oscillator, the yellow one, is below zero and starts to turn up. So those are the conditions that I look for when I want a buy signal. And these are the conditions I look for, exactly the opposite when I have a sell signal. At this point, you can see everything's red. I'm in sell mode. Oscillators above zero turns down. Histograms, all of them turns down. Boom, market goes down. Okay. Now, one of the things that I'm going to watch for right here, and it's why I'm going to be a little bit cautious on this market. We're coming into earnings season, and I talked about this in the video this morning. We've got big earnings coming up from all the major players, Microsoft and Amazon and so forth. And I don't think those earnings are going to be poor, just the way the market sentiment is to me right now. I don't think the market's going to receive them poorly. So I think we're going to survive earnings season. But here's what's concerning to me. Markets always need what I would call a reset. So you can see how many buy signals we've had here. So we've had one, just count the arrows. 1, 2, 3, 4, and there's a couple of buy signals in here, maybe little ones that you could argue that I didn't highlight. Okay, so a minimum 4, 5, or 6. Okay, and we haven't had the histogram below zero since the end of April, and we're now getting towards the end of October. That's a lot of buy signals and a lot of time on one side of the zero line without a reset. And when I mean a reset, I just mean, the histogram getting down and spending some time in the red zone just for balance. So 5, 6 buy signals here, haven't been in the red zone since or below zero since the end of April. It doesn't make me bearish, it makes me cautious. Okay? So like I said, I've got 2 positions on right now that are so far in my favor that I think I can just sit with them for a little bit longer. One is short put spread on Apple, so it expires Friday. So I'm just going to hopefully wait till it expires. I'm short to 255s, and the stock's 263 right now. So we would have to move about $14 down from here before I would start to hurt on it again. So I just want it to stay above 255. So it is 263. So we're going to stick with that one for right now. And same with Bank of America. I'm long the calls there, but that stock appears to be doing okay as well. I'm long the calls just a little over $50, and the stock's 51.70 right now. So that's how those 2 major tools work. Those are 2 of the major components that I use in terms of looking at charts to determine decision making. And the other major part, not to be underestimated by any means, is looking at what the option players are doing, because at this point the tail is wagging the dog and the derivatives market is pushing around the stocks, believe it or not. So that's the other thing I look for to see how positioning is in there. It's subjective. It takes some experience to look at it and put things together to see what I believe who's doing what, but it's a big help in determining where money's flowing into or out of, and which way those players think that the general stock market's going as well. So that's it for my tools. Now, I believe John had said that I was going to show you a couple of setups that I'm looking at, and I've done so in the broad sense of what I look for in a setup. But let's look at another market here. I want to emphasize this. I want to say that I'm not here to find setups or to do trades. One of the things that I think it was Larry Williams said was that your job isn't trader, your job is waiter. And so you just sit there and you wait until things line up and then you do something. I'm not out here looking for trades every day. I can tell you, I'm just not. So let me find the long-term bond ETF, which may be making a turn here and maybe showing us some opportunity going forward. So as you know, the bond ETF had most of its time here in negative territory, and now after months of I'm red on blue, I'm red on blue on both, and not having much opportunity in it either way, you can see things are starting to turn now. So what am I going to be looking for? Well, I'm going to be looking for opportunities like right here, where the market declines, histogram stays green, the trend indicator stays blue, and the oscillator turned off and gives me a buy signal. Okay, so I'm going to be looking for opportunities not in the bond market. We've had a pretty good decline in the bond market for quite some time, so I think the rally could have some legs, certainly back up to the $100 level. It's 92 right now, but not chasing it up here. I'm not chasing it up here. I'm watching it to watch for opportunities to set up. As far as that goes, that's the only one that I have on radar right now. There are some stocks that I think that their earnings are going to be okay. Microsoft has not done anything for quite some time. And as you can see, we're blue. Everything's blue. The stock has turned up here a little bit. So if I was looking for a sleeper, this one would probably be it in terms of am I willing to hold something through an earnings play? This would certainly be one that has all the earmarks of a trade that I'd want to be long. Now, of course, earnings are coming up. I believe they're the 29th. I can tell you right here, earnings are the 29th. So can sit on that, waiting for earnings on the 29th. Almost certainly the way I would do this is with some kind of spread. And the reason is because the implied volatility of the options is really high as we go into earnings. Implied volatility means basically how much time premium is built in, how much volatility risk is built into the option price, right? So if there's a big event, let me give you an example. There's a big event coming up, and this is going to be an oversimplified example. We're a couple of days before earnings. The stock's 515. The 515 call option that expires in a week may be $10 or $12 because even though there's only a week left and the stock's right at the strike price, it could still be $10 or $12 because Microsoft can move so much on earnings, and that time value that they have, that extra value based on the event risk, is the implied volatility basically. So you don't want to be giving that away if you're buying the options. So what you want to do is mitigate your loss or mitigate your risk a little bit by, say, buying the 515s and selling a higher strike, say the 530s or 535s or something. So instead of just buying these for $10, you'll buy these for 10 and sell these for 3. Okay, so if you were willing to spend $7 or $10 on the trade, you've already got 3 of it back by offsetting your risk against the higher strike. So that's how I would play that in some sort of spread. I would say this: if you're not following me right now with regards to spreads, and you're going, oh, I just like to trade puts and calls, it's like driving a car that only turns left. It just doesn't allow you the flexibility to do what you need to do. There's so many things you can do with spreads, and changing spreads around and mitigating your risk, and making sure that if you have a loss, it's not going to be a catastrophic one. So much advantage over straight puts and calls, although sometimes I do only do straight puts and calls. As I said, right now I have Bank of America straight call, but I have Apple Computer in a spread. And one of the reasons I did is because those Apple premiums were so huge that if they're going to let me collect those premiums, then thank you very much, I will. Okay, did I cover everything that John asked me to cover? I hope so, John. If not, you can jump in, and I'll loop back through and cover that.
No, great job, Joe. So we're going to get into a Q&A portion here in just a second. But thank you for sharing those insights, Joe, and the real-time analysis. So folks, what Joe just showed you is just a glimpse of what's possible when you combine some structured methodology with the precision of AI technology. So Joe, you were looking at your scoop and your X-ray indicators that you use, I think more with your target zone program, where you do trade predominantly spreads, though puts and calls when it's called for. But you also have the quantum AI program. Tell us a little bit about that, because that's just 100% mechanical, is it not?
That's correct. I mean, the rules have to come from somewhere. The input has to come from somewhere. So it did come from me. But after that, it just runs mechanically. I talked about looking at, say, for instance, the option book and seeing where I think the flow is, and there's some interpretation to it. Like, I have to kind of figure out, were those a setup option put buyer, or was that a seller? And there's ways to do that with some probability, but it's nothing exact. But with quantum AI, there's no fussing about. It's this or it's that. So it's completely automated. There's no input oversight. My hand's not hovering over it. It just does what it does.
All right, perfect. So guys, if you have any questions for Joe, go ahead and post them there in the question box.
So I might add, John, if I could.
Yeah.
That balances things out. It's because sometimes AI gets hot when I'm looking at stuff and going, oh, I don't know. But the computer doesn't look at it and say, oh, I don't know. It just does. And sometimes I'm doing better than AI. Sometimes AI is doing better than me. So it is a nice balance to have going on, for sure.
All right. Jeff wants to know, when you're buying a spread, do you have a goal for premium price relative to the difference in strike price to decide on purchase? In other words, like 25%?
Yep, that's a good point. Absolutely. You know what? Okay, there's somebody who's traded before. For sure, because sometimes, Jeff, I'll look at it, I'll want to do something, and I'll look at the pricing, and I'm going, geez, you can't do this, because they're asking you to risk $5 to make $1.50. You can't do that, okay? But you'll be in a different market environment somehow, and the exact same stock using similar strike prices, they're going to ask you to risk 2.5 to make 2.5, which I will do because if I think there's a 75% chance I'm right, then I'll take that trade. Right? So I don't know if there's a hard and fast rule, Jeff, for that, in terms of, because there's so many different kinds of spreads, there would have to be a different rule for every one, whether you're doing diagonal, vertical, credit spread, debit spreads, whatever. But it's a fantastic point that option pricing can fluctuate. It's not all the same. And looking at a spread and determining, hey, does this make sense, is really good. And sometimes I put on spreads, Jeff, that I put them on only because they make sense. And I'll give you an example. I could do a calendar spread, which means I'm using the exact same strike. So Microsoft's up there now, so let's say the 515 strike. I've seen opportunities where I can buy the November 515 for, let's say, at $25, okay? And the October 24th, maybe, you know, let's go $16 or $17 or something. So, and why would that be? Why would that close option be so highly priced? Well, because there's an event risk probably coming up, so it's really highly priced. So I can put that spread on for $8, which means this: by October 24th, that short dated option, it's going to have an intrinsic value, and that's all it's going to have. It's not going to have any more time value. Okay, so I buy that 24th back or let it expire, whatever happens. I've still got the far dated option that I've got, you know, maybe $8 invested in. I now have a chance to sell the October 31st, and I may get $5 or $6 for that. Well, now I've only got $2 invested, and I will put on spreads like that occasionally if I see something in the market where I don't know which way this thing's going, but I'm pretty sure that if I've got 6 or 7 chances to write against that long dated, I can make up that spread. So I don't even have to be that sure. And if I do get sure, somewhere between now and long dated expiry, I can change that spread around very favorably to me, depending on what I sell against it. So yeah, I will put spreads on solely because the pricing looks mixed matched to me, okay, where I get to sell something that I believe is expensive and I get to buy something that I believe is cheaper. So I can't even tell you what a good point that is. It's just not, oh, I do spreads or I don't do spreads. It's what spread makes sense. And option pricing changes. People think, oh, your options are options. They aren't. You know, in October, an Apple call for an at-the-money strike may be $5, okay? And in February, an Apple call with the exact same time to expiry may be $3.85. So it's like, you know, 25% different in price, even though it's the same time to expiry and it's an at-the-money call. Option pricing changes, and being aware of that is really important, especially, well, not only when you're doing spreads, when you're buying puts and calls straight out, because you don't want to be buying straight out puts or calls when option premiums are crazy, because you're fighting that time premium you're playing. But on the other hand, if you're in an environment where option premiums are getting cheaper, then buying straight out puts and calls makes sense. And I'll take that one step further. Option premiums tend to get cheaper when the market's less volatile. What's the flip side of that? Well, when the market's less volatile, it's usually getting ready to do something. So it's a sort of a double advantage for you, because you can buy cheaper puts and calls, and you know the market's probably going to do something soon and reward you. So you know what? I think of all the times I've been doing these webinars, I don't know if I've had a better question than that. It's an excellent question.
Yeah, excellent question. And Marco wants to know, on the X-ray, what is the difference between the candles turning blue? Let's see, it got cut off here. Let me see if I can see the rest of his question. Turning blue and the bottom indicator turning blue.
Okay. Well, they both need to line up, and they both need to line up at the same time. So first of all, we look at the candles first. The X-ray at the bottom is not a factor until the candles changes, okay? So I don't care how many times this changes here, I don't care. I'm only looking, now I'm at my left part of my screen here, I'm only looking when that candle changes blue, okay? Then I look below and see if the X-rays also changed to blue or is already blue, and then I have a signal, okay? So if it changes to blue like it does right here, again, I'm on the very left of my screen, doesn't mean anything to me because I look below and I see that it's red, so there's nothing. Now, conversely, right here, I can see that my candles are all red. So my X-ray turning blue it means absolutely nothing to me. It's zero, okay? There's a process that we go through, and the process is you first look at the candles, okay? and they have to change color, and only then, the second step is the process, as you go and look below and see if you got confirmation down below. Okay, so that's another excellent question. Yeah, you have to go through those exact steps. So it's always candles first, confirming indicator X-ray second. Okay, that's the way to look at it.
All right, and guys, just so you know, through Joe's target zone program, when we're talking about spreads, Joe does all the heavy lifting for you and gives you those trade setups through the signal-based service, but it's also educational. So he's teaching you how to do this yourself, right? So it's kind of like a learn and earn program. All right, Edward wants to know, is this system based exclusively on using the daily time frame?
The X-ray, yes, is based exclusively. If I'm going to X, I can work it on monthly, or sorry, if I'm going to Scoop, I can use it on 30-second charts, hourly charts, daily charts, weekly charts, whatever. Let me grab one and I'll show you an example here. We'll go to a longer time frame. Okay, so I'm just going to change. This is the S&P here. So all I'm going to do is I'm going to change this to 5 minutes. Okay, just picking a number out of the sky here. So again, we want to trade when we're solidly above blue, right? So if you see where my cursor is here, like my cursor, let me change my cursor setting so it's a little bit easier to see. Okay, so see where my cursor is right here. You can see we're solidly above blue, right? I'm about 2/3 of the way off the left of the chart. Got my histogram here, solidly green. Scoop comes down and turns up. Was that a good place to buy if you're a 5-minute chart trader? Yes, it was. So let's do the opposite. Let's go to a weekly chart. Okay, so lots of examples here, but you can see we start to turn blue here. So we're looking for the next dip. What happens right here? The histogram is very solidly green. Scoop starts to turn up, and you've got actually a double bottom here before your next big rally. So X-ray, daily swing charting, Scoop, any time frame that suits your fancy.
All right, and let's see, Joseph wants to know, Joe, where do you look at dark money in the options? Is there a specific website?
There's a number of them. If you just look at them up, Unusual Whales has it. Oh boy, if you go on YouTube and you Google it, option flow or dark pools, you'll find it. I'm trying to think. Shutter Flow, I think, is another one. There's a few of them out there that go and do it. Spyglass is one. So yeah, there's a few options for you to look at on that. Although, as I said, it's taken me a long time to figure it out. It's not easy.
And that's why if you want Joe to do the heavy lifting, he's been doing it for 30 years. Just subscribe to his services. And Jeff wants to know, do you typically run more calendar spreads or vertical spreads?
I don't usually do that many calendars, Jeff. Here's an example of how I can end up with a calendar. What position did I have? It was a couple of weeks ago. Anyway, I had set it up as a vertical, as a diagonal vertical, Jeff. So I was long, say, in November, and I was short the same month, actually. So I would have been short, say, let's use Microsoft. Let's use the SPY right here. Okay. So the SPY is 514. I was long a 515 November call and short a 530 November call. Well, this is Microsoft. It doesn't matter. And And so it was a bullish vertical spread with time. So what happened? Microsoft went up, and I go, okay, what's happened is I could now gain myself a whole lot of protection by buying back my short call in November from the 530 price and selling a 515 in October. But remember, the market's gone up. So this 515 has gone up at about 2 times or 3 times the pace as the 530 has. Okay? So if I paid, say, $6 for the spread, and I'm giving you numbers that aren't exact, I'm giving you numbers that for the example, I can change that spread around and get a $9 credit. Okay, so I've spent 6, I've already got 9 back. So the most that can happen, no matter what happens, is I'm going to make $3. Okay. However, if the market just kind of drifts around or doesn't do anything huge, I'm going to lose all the time premium on that short dated, and I can actually make more money than I could have on the original spread. So I don't usually go hunting for calendars initially, but sometimes I'll change things into a calendar if it makes more sense to hedge the position or sort of lock something in, but still give me, a lot of upside, but the ultimate in protection because I've already locked a profit in. And that's what I said to you before. If you don't understand how to use spreads, it's like driving a car that only turns left. Your hands are tied. So many options, strategies that you can use. And sometimes I get in the wrong side of the strategy and I have to turn it around, but I can, and I end up making money, net at the end of it, because I just turned the spread around by keeping one leg and changing the other leg. So, good questions.
Yeah, excellent questions. And Joe, just talk a little bit about your target zone and your quantum AI as far as performance, what you're seeing this year, because I know you've pretty much been killing it this year with both programs.
Yeah, for sure I know, because I have my hands on target zone all the time, that it's at new equity highs, which means that whether you started last week, a month ago, a year ago, or 3 years ago, your account's at the highest it's ever been. So it's doing pretty well. I think the last loss I had, I think Devon Energy, maybe 6 weeks ago, I bought the option at 330 and sold it a week later at 330. But other than that, I think I got to go back maybe into May or June before I had a loss. So yeah, we've been doing pretty well, and I'm quite happy with it. The quantum's done well as well. I don't know, because I haven't looked at it this second, whether it's at new equity highs or not, but I know it's got to be pretty close if it isn't. And again, quantum is completely automated. The computer spits out the signal. So.
Yeah, I was looking at some of the numbers that your office had sent over to us, and I forget off the top of my head which program was which, but I think it's either target zone or quantum. You're up about 60, well over 60%, and the other one's like 100%. So yeah, phenomenal numbers. You're crushing the the index.
That's not compounded either, right? That's
right,
just a simple arithmetic.
Yeah. Yep, no compounding. Yeah. Another question is, do you pay attention to timing like the Goldman roll in the futures?
Honestly, no. Honestly, it may have an effect the day they're going to do the roll, maybe, but no. Honestly, I don't. I don't know. There's plenty of whales out in the market, and I try to find out the whales that are being a little more quiet. You'll see a lot of stuff. If you watch, you'll see a lot of stuff that's done at 1 minute to 4 or 30 seconds to 4. Where nobody can, so they can get it in before anybody can find out what the heck they did. There's a lot of manipulation in the market, so you've got to be okay. Let me rephrase that. I believe there's a lot of manipulation in the market, so much more than there used to be. So you've got to you have to be aware of all of that stuff, but if you know what to watch for, it can actually be an advantage, not a disadvantage.
All right, fantastic. So some great questions, everyone.
Yep, really good. Yep.
So let me do this, since it looks like that's the end of the questions there. Let me take this back and show my screen again here. All right, fantastic. So thanks again, Joe, to sharing, kind of give us an in-depth look in the markets, the current markets, and where things are at. But we want you guys to join us, because this is the exciting part. This is only part one. If you join us Thursday, that'll be October 23rd at 1 p.m. For part two of Joe's Precision Profit series. In that session, Joe's going to go deeper, looking at some live trade examples, showing exactly how his systems work together, that target zone and quantum AI. And he's going to be introducing a brand new trading community that's going to revolutionize your trading. So you don't want to miss that. And as a special thank you for attending both webinars, if you come to the second webinar and you've been to this one, you're going to receive Joe's ebook. That's the #1 secret to growing a small trading account absolutely free. So to reserve your spot for Thursday's session, or if you want to speak directly to one of FFR's trading strategists about Joe's programs, you can always call us. Let me put up the numbers here. If you've got that, that's the 800-883-0524 number. If you're outside the US, you can use that 737-292-4425. I'm going to post the link, a couple of links I'm going to post here in the chat. One is if you want to set a time for an appointment, you'll be able to do that to speak with a strategist at your own convenience. All right, so let me post this here. If I can get that out to you. Okay, that should pop up there in your chat. And the next one will be a link if you want to sign up for Thursday's webinar. I'll post that link here as well. So you all have that. And let me get that one in there. All right, so I've got both links posted there in the chat. You can grab those and register for Thursday's webinar, and we'll also if you want to sit down with the strategist and go over. So Joe, talk a little bit about Thursday's webinar. What can we expect from you?
Well, we're just going to go, I guess, expand a little bit more on what we talked about today. How the systems work together, and I'll try to do a couple of our examples from trades, or not try, I will do a few examples of trades that we actually have done in the last couple of months, and
yeah,
just an expansion of what we've done today. Yeah,
this is something new that we're gonna Joe came to us and we try to put together kind of the best of Joe all in one package for everybody, with the education side of it too. So it'll be a brand new signals program and community that's going to combine Joe's most successful systems and the indicators into one elite membership, if you will, designed to help traders achieve your accuracy, consistency, confidence. So you'll get signals, but you also get time with Joe. Right, a lot of great bonuses and stuff. If you actually want to meet Joe, we'll have all that set up. If you come to Thursday, we'll talk about that. How those, again, like Joe said, how those systems and indicators work together, the exact indicators that Joe's using. I think he showed you those today. And real trade examples. We'll go through, I'll show you the entire history of the signals for like target zone and quantum. It goes back to 2018. So Joe's been doing this a long time. And then how you can become part of that. All right, we'll talk about that on Thursday. All right, so I posted those links, and so sign up for that. Get ready for that on Thursday. Other than that, let me just see, anything else you want to talk about, Joe, today before we cut out?
Nope, just thanks for coming, and it was a good group today. There's really good questions. Thanks.
Yeah, excellent, excellent. So on behalf of everyone here at FFR Trading and Joe Duffy, just want to thank everybody for joining us today. And I wish you, and just remember again, markets reward preparation, not prediction. So stay disciplined, stay precise. And we'll look forward to seeing you guys on Thursday. That's again, October 23rd at 1 p.m. Eastern time for part 2 of this incredible series. So until then, trade smart and have a great day.